Hello, everyone, and welcome to Lesson 4 of Altfin's Trading Education Program. In today's lesson, we'll cover another trading strategy that has to do with momentum in an uptrend. In this trading strategy, we will utilize a few key concepts and indicators, including MACD, or Moving Average Convergence Divergence Indicator, which is probably the most powerful trend and momentum indicator combined in one, as well as utilizing our prior concepts that we learned, which is trend trading, identifying an uptrend, as well as identifying and utilizing resistance and support levels. And finally, we'll talk about the MACD signal crossover and MACD histogram inflection, which really are two trading strategies utilizing MACD indicator. So what is MACD? MACD is short for Moving Average Convergence Divergence Oscillator or Indicator. And it's actually, even though the name it is a mouthful, it is relatively simple and very effective momentum indicator. And it really offers the best of both worlds, momentum and trend. Momentum refers to essentially to price moving up rapidly or gaining momentum, gaining strength. And so in general, that's what momentum means. What MACD indicator does is utilize, as the name suggests, moving average convergence divergence. It utilizes moving averages, which we have covered a couple of lessons ago as the best indicators to identify trend. So it utilizes moving averages, specifically exponential moving averages, to identify momentum in price. And then we utilize certain crossover techniques to identify the buy and sell signals. So what MACD consists of, and let's go ahead and go take a look at a graph, which is basically a recent graph of a chart of Ethereum. And the upper part is your typical price chart. The bottom part of the chart is the MACD indicator, which consists of three different components. Let's get to that soon. So in the upper price chart, this is important to understand. I don't expect you to necessarily remember how MACD indicator is calculated, but I think understanding the components of it will help you understand how MACD indicator works and how to best utilize it. So the MACD indicator, as indicated in the prior slide, first the system calculates the MACD line, and MACD line is basically the difference between the 12-day exponential moving average and the 26-day exponential moving average, right? And recall when we talked about moving averages in the prior lessons, you have two types: a simple moving average, which is just that, it's a very simple traditional way of calculating an average across a time span of either 12, 26 days, or 12 hours, 26 hours, depending on the time interval you're working with. Obviously, if you're working on a daily chart like we have here, then EMA 12 means it's a moving average over 12 days. And EMA 26 means it's a moving average over 26 days. But if you're working with an hourly time interval, then EMA 12 means moving average over 12 hours. So EMA in general is a modification of a moving average in that it emphasizes, it puts greater weight on the recent price changes and therefore is more sensitive to recent price changes than a simple moving average. And so this indicator MACD uses EMAs, EMA 12 and EMA 26, as you can see here in the top price chart. Now, the EMA 12, because it's a shorter time period, it copies the price closer than EMA 26, which is sort of the slower moving average. But the difference between those two gives us the MACD line on the bottom chart in the light blue color. And basically, as you can see up here, as the difference between EMA 12 and EMA 26 increases, the MACD line rises, and that indicates increasing momentum in price. That captures it really well. As the two moving averages converge, let's go ahead and do some drawings here. As the two moving averages converge, for example, here, then the MACD line starts to decline, right? Because it is the difference between those two moving averages. And as those scissors starts to close, the difference gets smaller, and the MACD line therefore starts approaching the zero line. And so again, the MACD line captures really well the momentum. As the price increases rapidly, the scissors open up, MACD line rises. As the price starts sort of flattening out, as we have here in this section of Ethereum chart back in August, the difference between EMA 12 and EMA 26 is converging, and the MACD lines begins to flatten out or actually decline. Now, the other component that MACD uses, or the MACD trading strategy or indicator uses, is the signal line. And the signal line is essentially another moving average, exponential moving average, EMA, with a 9-day period of the MACD line itself. Okay, so it's a moving average of the moving averages, if you will, and it's designated here in blue. And the simple trading rule, which we'll explain in a minute, is that when the MACD line crosses above or below the MACD signal line, that gives us an entry and exit signal. Now, also important is to understand what the histogram shows us. That those are the green bars that we see here. And histogram, MACD histogram, which we will utilize as well in sort of a more advanced form of the strategy. The MACD histogram, the bars illustrate or capture the difference between MACD line and the signal line. Okay, the difference between this line and this line is illustrated or captured by the histogram bars. And so as the MACD line and signal line diverge, the histogram bars rise. As the MACD line and signal line converge, the histogram bars decline or even dip into negative. All right, so let's go take a look at some live examples. Another live example, perhaps. Well, in fact, let's go ahead and jump into the next page, which is how to trade MACD. And then we'll look at some live examples. Now, there are various ways that traders utilize MACD. I have listed 4 ways, but there are probably more than that. But overall, I think a lot of the strategies sort of fall into one of these 4 categories. We'll cover and talk about the first 2 because I think the latter 2 are less practical and more difficult, frankly, to execute. But how to trade MACD, sorry about that. The most common and I think effective way of trading MACD indicator is the signal line crossovers. That's the most used one. And that's basically what we illustrate here. And our system essentially does that for you by flagging the crossover points with either a buy or a sell signal flag. Secondly, also useful, and I think underutilized, generally speaking, is using the slope of MACD histogram. You remember those histogram bars? Well, those can also give us clues about a change in momentum. In fact, it is even an earlier signal than the signal line crossover. Even before the flags, the sell and buy flags appear in the MACD chart, this histogram oftentimes already foretells or signals a change in the momentum even before the signal line crossover occurs. And we'll cover that. The other two, the center line crossover, I think is the opposite, is very late. I think it's therefore renders it not useful. And the last number 4 in terms of the trading strategies, MACD divergences. That's a bit more advanced technique of spotting potential reversals, where the MACD trend could be improving while the price is still declining. That's a bullish divergence that indicates that the price could be bottoming out, and there could be a reversal. Now, we won't cover that here, maybe in future lessons. It's also difficult practically to capture that and to find that. It really requires a lot of visual examinations. It's not easy to screen for. And also, it is a reversal strategy, which would indicate that the price is in a downtrend to begin with, and the strategy basically tries to pick those bottoms and reversal points. And I think that's very difficult, and the success rates, I think, are low, because generally speaking, really the cardinal rule number 1 for us is to trade with the trend. Trend is your friend, and that really is true, and it works, and it gives you 50% of the way there, or basically increases your success rate dramatically if you stick with trading with the trend. And so by definition, when you trade with the trend, you're not going to be looking for reversals, because you're going to be looking really more for opportunities during the pullbacks or opportunities in the momentum upswing where you can join that uptrend and continue riding that uptrend, as opposed to finding the bottoms of the downtrend. Okay, so the MACD divergence, if you get to that point where you think you can look for basically more advanced techniques, this is one of them. So let's get into the most used one, and I think the most potent one, which is signal line crossovers. And the steps and the rules are relatively simple, and we make it simple basically with the platform, which if we go to the platform and look at the charts, let's look at the Binance coin, for example, right here in the MACD chart, we make it very simple by showing you where to buy, where to sell. Now, that alone is not enough. And let's go ahead and get rid of, for now, we don't need RSI. We don't need the SMA 50, SMA 200. And that's really all we need for now. It's the price chart and the MACD chart. Nice and clean, no noise. Now, that alone, so let's review the signals. The rules. Buy signal occurs when MACD line crosses above the signal line, right? So here in this chart again, the MACD line is the light blue, the signal line is the dark blue one. So when the MACD line crosses above the signal line, as it did here, there is a buy signal. And then vice versa is the sell signal. Now, it's not always going to work, and there are some ways to increase the success rate of this strategy, because I think just the signal alone is not sufficient to make a high success rate or generate a high success rate of the strategy. Increasing the success rate is certainly trading with the trend, which in this phase from May to August, I'd say Binance was in a downtrend. So we probably would have been out of the market in this area and not really utilize the MACD signals because we're in a down market, first of all. But second of all, there will be times when the MACD signal gives us false signals, essentially. And you're going to have that with any trading strategy. Even if you achieve 65-70% success rate, which is very good, you're still going to have 30-35% losing rates, or basically false signals that certainly just simply don't work out. And MACD is prone to that, especially in the sideways market. There can be sometimes many buy and sell signals rapidly, one after another, that leads to some whipsawing. You buy it, then you in a few days sell it, and maybe lose a little bit of money, but it's worth doing that. And if you follow some of the other rules with respect to trading with the trend, and then also minding the resistance and support zone, as we'll explain in a minute, you will increase and eliminate some of those false signals and increase the success rate of this strategy as well. But if you take some of those losses, there will be times when you'll have massive gains, because it is a trend and momentum strategy, and typical of trending strategies that you're going to have many small losses, but then some massive gains. And you can see that here, right? Buy, sell, probably didn't make, or actually maybe even lose a little bit of money. And then here comes a buy ahead of the massive gain here, buying at around 300 and riding it all the way to the sell signal, which came at around 460 to 480. So a very solid 50% gain right there. That would have covered more than the losses that would have occurred in the prior signals. Now, the other rules, as I mentioned, and it really should be here, is trade with the trend, but also mind the resistance levels. And that means, if you recall, the first trade that we did in the first lesson was CELO, and that worked out really well. And that was basically a momentum in an uptrend trade. It was exactly this strategy. So let's review it and see what I mean by mind the resistance. Beware of resistance levels and support levels as well. Resistance and support are concepts that we learned in the last lesson, and we will review over and over again, because every trader needs to be aware of where the support resistance areas are, because that's where a lot of the action happens. And that's no different. There's no difference with this one as well. Even this strategy has to be mindful of that. And so what happened in CELO, if you recall, let me zoom out a bit. Well, actually, that's good enough right here. What we did is we saw this buy signal down here. Let's make it even bigger. In fact, also, by the way, again, I'll repeat that, but you can add trade information into your charts if you connect your exchange accounts to our system through APIs. Then you can see your trades in the chart. And so during the lesson one, we put this trade on where we saw that there was a bullish MACD signal line crossover. Secondly, The price was in an uptrend, as you can see here, strong uptrend, in fact, now. But also, it had just broken above the $6 resistance level. So when we zoom out, we can see the $6 resistance level has been in the play for the entire year here. See here, right here is a level, $6 level where the price was rejected a couple of times. Here it reached, surpassed, but quickly retreated. Same here, and here a few times. I mean, a lot of action around $6 level here. Clearly, $6 is a resistance level that once surpassed could turn into support level, a concept known as polarity, and we explained that in the last lesson. But more importantly, going back to the trade, when we saw this MACD buy signal in an uptrend, and when price also surpassed the $6 resistance level or zone, that to us was a signal sort of that all the stars lined up. So we did go ahead and buy 170 units of CELO at around just about $6. And we also, so keep in mind the resistance. We also determined that the next resistance above that, and what happens usually when the resistance level is broken or surpassed, the next resistance level becomes the target, price target. The next resistance zone was $8. We can see that a few times the price has reached and reversed at around that level of $8. So I thought that was going to be our target, and we started taking profits as we got really close to it and closed the position. You can see it here in the graph. We did 2 trades, half a position at $7.64 and the half position at $7.80, and we exited the trade before it plunged down or pulled back. Point being that this was a bullish MACD signal crossover trade in an uptrend and with resistance lines in mind. Okay, so that's what we mean here. Mind your resistance and support levels as well, but particular resistance levels when you enter the trade. What we don't want is to get involved in a trade that has a MACD buy signal, but right below the resistance level. So I know I'm getting a signal here, but I'm so close to the resistance level where I've seen that multiple times the price has gotten rejected. That signal I would have probably passed on. Okay, so that's the context that you have to keep in mind to improve the success rate of the momentum or MACD signal. Preferably the signal occurs with ample of space ahead, above or below the resistance line. Okay, so we have some room to run here. I'd say at least 20%. But it's up to you to determine, how much room you want to give yourself on the trade. But I'd say about 20% is a minimum for me. Getting back to the rules, and take profit as you go up, right? Don't get greedy, especially as you approach that target, which is the next resistance level, if there is one. I mean, if we're completely in making new all-time highs, that becomes more difficult. But trim your positions like I did. I took 50% of my position off as we approached it, and then the other half of the position was closed just before the resistance line was reached. All right, so how do we find such opportunities? And that's where our platform really excels, is helping you save a bunch of time, because visually going through every single chart is impossible. There are thousands of coins. So our platform excels with you're basically creating custom screens to narrow down the opportunities to just those that really satisfy the criteria. There are opportune and have had recent bullish MACD signal line crossovers. So let's go ahead and build those. Getting back to the screener. And again, here we have 3 different filters that we put together. They're very similar one to the other. Basically, we start with a filter that's the most selective, and then we start relaxing the criteria a bit, depending on how many choices we get in the first filter. So let's start with the most selective one, which says we want situations where the MACD, there's a bullish MACD crossover, and a recent one, ideally within 5 intervals, but I'm even going to be even more selective and say within the last 2 intervals. What that means, 2 intervals means last 2 days, because we are working on a daily time interval. Each interval represents 1 day. So each candlestick is 1 day on the chart. If I were on the hourly time interval, then each interval would be 1 hour. So 2 intervals would be in the last 2 hours. But I'm working on a daily interval. So 2 intervals means bullish crossover or crossed above MACD line, crossed above the MACD signal line, right? I add that filter. Now notice, let me reverse that. Notice we start with about 1,700 altcoins that we track. And once I apply this filter, we're down to 47. We're already down to just a fraction of the total. Secondly, what we want is an uptrend, right? And as we indicate here, we're going to use the medium and long-term trend ratings. And the reason I'm not using the short-term trend rating is because that's quite volatile. The short-term trend can, with the swings up and down, can change, and that could eliminate some choices that I think are still valid. I would prefer to really use the, I'm sorry, here under the trend, moving average trends. I think the most useful one is the medium trend for this purpose. So I'm going to say that medium term trend has to be up, at least up, if not strong up, but at least up. So now we're down to 17 from 47. And I add the long-term trend as well to be up. Now we're down to 6. And I always want to have some minimum market cap. I'll put it at 5 million. Now we're down to 4. And the last criteria is RSI. RSI, a relative strength index, and we'll explain it in the next lesson when we utilize it in a greater, more extensively. But RSI essentially is an oscillator that oscillates between 0 and 100, and it basically tells us whether the price is way overbought at 100 or way oversold at a 0. But typically in a good bullish uptrend, the RSI is above 50. All right, so now we're really getting selective, and that really didn't make a difference. We're still at 4, but in the future, that may make a difference and basically reduce the number of results further. So first of all, let's go ahead and save this as MACD by crossover version 1. And then you'll have it basically under your self filters right here, right? You can apply it again in the future. And here are the results. Not a lot. 4. Let's take a look at, well, let's go ahead and relax the criteria a little bit, okay? So in part because of the pullback that we had a couple of days ago, a relatively sharp drawdown or pullback. I'm not surprised that we don't see very many bullish MACD crossovers in such a market. So let's go ahead and relax the criteria and get more results. So this would be potentially the ideal set. Now let's relax the criteria a bit. And I would start with the RSI. That really didn't really make a difference today, but in the future it may. And then I would also, as we have in the presentation, I remove the RSI. Okay, so now I can save this as version 2, MACD by crossover version 2. So that's a bit more relaxed. In this case, it didn't really make a difference. And the third version is relaxed even more to say, okay, the long-term trend is maybe not as important as the medium trend. Maybe we could also have long-term trend to be neutral. And so let's go ahead and remove the long-term trend as a criteria. So let's see what difference it makes. Okay, now we have 10, a little bit more. Not a ton, but that's okay. We don't want too many, because that would really increase the amount of time we need to visually sort of analyze the further steps. So 10 is a good number, and we're going to save that again. MACD by crossover version 3. Sweet, done. Okay, so that's how you scan for, again, bullish MACD crossover over the signal line. So that's your buy signal in the last 2 days, 2 intervals. Those that are in an uptrend on the medium basis. And let's go ahead and check the trends here. On the trend tab, you can see that all of these are in an uptrend or strong uptrend or at a minimum neutral, with a few exceptions. For example, Monero here is an uptrend on the medium basis or medium term, but downtrend on the long-term basis. I probably would avoid that, but the others are still legit. All right, so let's go ahead and look at the charts and see if there's something that we would like. Now, by the way, by default, we have various indicators here like SMA 50, SMA 200, RSI. That's for now, right now, for this strategy, we don't need those indicators. That's noise. So let's get rid of that. Either you basically manually check it off, or you can go to show on chart and say show filter on chart. Boom, we're just down to price chart and MACD. That's sufficient. Okay, interesting. Crypto.com had a buy signal issued a couple of days ago. Monero had a buy signal issued a couple of days ago. Loopring. All right, looks like decent choices. Let's take a look at one of these. Coty. Now I'll zoom out to see the big picture and to see the resistance areas, right? So let's see. Clearly in the past, the price shot up here at around 50 cents, got rejected, shot up here to about 60 cents, got rejected, again 50 cents, 50 cents, 50 cents. This is more like, that would be probably 70 cents. All right. And also support areas here around 50 cents. 50 cents is a major horizontal level. At times in the past, it acted as a resistance area. And then once it was surpassed, it acted as a support area. So let's designate it around right here, right? You connect those points where the upswings have reversed or downswings have reversed, and you can clearly see that 50 cents, and it also makes psychologically sense that at 50, sort of a round number, the traders find that as being either expensive at times, and so it took a while for the price to surpass that, and then it did make some new highs at around 70 cents here. But the point being is that we are above that resistance area, which may now act as a support as it did recently here. So that's good. We are approaching the 60 cents. It doesn't look like a very strong resistance area because we only have a few touch points there, really shot up to 70 cents. So I'd say that this is potentially a good trade with an upside to about 70 cents, which is your all-time high. Okay, and when we add SMA 200, we're well above that. That's good. Clearly, we're in an uptrend. Your downside from this level, I'd say I would close the trade if it dipped down to this support area of 50 cents or just below that, say 45 cents. You want to give it a little bit of a breathing room because it's never exactly 50 cents. It's a zone plus or minus. Even if it dips below 50 cents, it's still within the support area or support zone. So I'd put the stop loss order at about 45 cents. So if it dips below this recent downswing, then the trade has gone wrong. And my target level would be about 70 cents, which would be about a 2-to-1 reward to risk ratio. Now, let's go ahead and cover one other thing before we get into the trades, which is how to utilize MACD histogram and MACD histogram inflections. So let's get back to the slide where we explain histogram. Remember, histogram is the difference between the MACD line and the signal line. As those two diverge, histogram bars rise. As those two lines start converging, indicating loss of momentum or diminishing momentum in price advances, then the histogram shrink. Histogram bars get smaller, they shrink, even dip below the zero line, so dip into negative. All right, and so how can we use that to our advantage? Well, let's look at the basically here we have the Ethereum price chart, just like we did in the beginning, but here we'll look at some interesting additional color. Let's first zoom in because this is small. Let's zoom in on this area. Okay, so what we have here is, again, we have your buy and sell and buy signals. That's the basic signal line crossovers that we've discussed that we are going to trade. But notice that the histogram bars highlighted in green oftentimes can give you an early signal that the momentum is inflecting and changing. Because when, let's look at this example right here. Let me get my drawings right here. And so we would have bought it here, right? And you notice that the histogram bars are rising nicely as the price is going up. The MACD line is rising, the signal line is rising, but slower, and those two are diverging. And as they diverge, indicating increasing and steady momentum in price advances, the histogram bars are rising clearly. Nicely rising until we get to a point where the price, as indicated in this section here, or particularly this section, starts flattening out, going sideways. The momentum is stalling, it's diminishing, and that's reflected in the declining MACD histogram bars, right? And so that's an early signal that there might be a change, an inflection in the momentum. And that's a canary in the coal mine, as they say. And after two bars or two histogram bars declines, I would say that may be a signal to get out, or at least trim the position. Now, the positive is that there is the histogram bars can give you some early indications of inflection in momentum up or down. And if you did that, right, if we did that, if we sold at this point, which is highlighted by the red line, we would have sold, oops, we would have sold about right here. Whereas if we waited until the actual signal line crossover, right, then which is the gray bar or the gray line, we would have sold lower right here. So our exit would have been better. We would have had a more profitable trade if we had looked or used the MACD histogram. Now, let's continue with buy it here again and again. Your exit here with the sell. Well, we could just wait for the sell signal. That's fine. Or we could look at the histogram bars and say, hey, wait a minute. The histogram bars have declined now for a couple of days. That could indicate an inflection in the momentum, and indeed the price has gone flat. And so then again, if we had sold it here, or at least trimmed the position when the MACD histogram bars begin to decline, then we would have had a better exit point than if we had waited until the sell signal. And that also works with buys. It could get you into the trade a little sooner with a little more upside if you take a look at the histogram bar changes and inflection points. So here, right here, the price was declining or flatlining, and so the histogram bars were in the negative here, right? Now, they were really ugly right here, but after that, they started improving. The bars were basically rising again, still in the negative, but basically improving from the low here, indicating potential, positive or bullish inflection in the momentum of the price. So if we listened and looked at the histogram inflection, which is indicated by the red line here, we would have gotten into the trade sooner than if we had waited for the actual signal, the crossover signal. Let's zoom out to make that more clear, right? So again, if we had used the histogram bar inflection point here, we would have bought the Ethereum about right here around 3,000. Whereas if we waited for the buy signal, actually would have bought it about here, which is about 3,300 or so. So a bit later and a bit worse entry point than the histogram. Now, of course, the downside of using the histogram, because it's so early, is that it can also give you a lot of false warnings or false signals. Oops. So getting back to this slide here, right? MACD histogram inflections occur even before the signal line crossover. So it can give you an early entry or an earlier exit. So that's the positive. It is an early indicator of momentum inflection. But the negative is that it can give you lots of false signals and can lead to some whipsawing or maybe exiting the trade too early, entering the trade too early. So really, I use it as a warning that I need to pay attention, maybe trim my position if I'm involved, if I bought the coin and it's gone up and I see that the MACD histogram bars have declined for a couple of days, maybe I'll take some profits off the table, trim half the position or so. So it gives you a warning, or if the price has been declining and it starts flattening out and the histogram bars are starting to improve for a couple of days in a row, then that may be an opportunity potentially to get involved. And again, a warning. So that, I think, is a good tool to have. I think it's a little bit more advanced tool. I think you'll be very well served just to use the simple signal line crossover to begin with and not complicate things with the histogram. But over time, you'll be able to layer on this as an additional criteria for your trade exit and entry and exit selection. Okay, having covered that, let's go ahead and get back to our potential trade here. So we talked about COTI as a potentially interesting idea. Let's look at loopring as well from our search results or scan results. First, we always take a look at the big picture. The big picture is that we received the MACD buy signal line crossover signal, and we're right up against that 60-cent level. As you can see, the price is at 54 cents. We're just below that, but I would say that, let's see, 60 cents got rejected here, got rejected here, got rejected a few times here, and several times here and here as well. So 60 cents is unfortunately quite another one right here, way back. So 60 cents seem to be quite an important psychological level for traders, and therefore I would not get involved here just ahead of that because I think we may get rejected again. Maybe I would come back to it tomorrow and see if we surpass it. If we break through it, I think that we could go to 75, 80 cents. But it's too early now for me. Otherwise, it's in an uptrend. It had a big green candle here on big volume, indicating some very positive strong conviction from buyers. But it's too early based on where the resistance is right now. Take a look at another one. We've covered loopring. Let's look at crypto.com, the crypto exchange. All right, so this is an interesting situation where look at all these sell and buy signals bunched up, right? But what I do like about this trade here is that we actually just crossed the resistance level at 20 cents. All right, let's again look at the support and resistance level indications. Here we touched 20 cents several times, got rejected. Here as well, got rejected. Here it acted as support level. Here it acted as resistance level. So 20 cents level has seen a lot of action here. A lot of action, a lot of turning points, either as a support or resistance level. Now it's acting as a resistance level. The price is at 20 cents, just above 20 cents. We zoom in, and we can clearly see it now, maybe zoom in even more, right there. So we're just above it. We had 1, 2, 3 closes above it, I'd say. And also look at these. Well, there's a big volume on the down day, but bounced back with just as big of a volume yesterday, and today it's trading up as well. And with this recent buy MACD signal line crossover, I would get involved with the assumption that my upside is where? Well, let's look at the next resistance area, which is my target, and that looks like at 25 cents. That's easy. That's easy to see, because that's where we've had some really all-time highs. And let's go ahead and draw that. And I draw it as a rectangle because, as we talked about this in the lesson 3, is that resistance and support, horizontal resistance and support levels are usually zoned, right? It's not exactly the same, that number, plus or minus, but you can see that the price reversed at around that level a few times in the past. So I'd say that's my upside, 20 to 25 cents. From 20 to 25 cents, that's what, 25% upside. Well, where's my downside? Where would I put the stop loss? Well, that would be the recent low in the downswing. So let's zoom in. Recent low in the downswing, I'd say, is right here. Right, a couple of days ago when the market pulled back sharply, the price, and that looks like a decent support area around that 18 cents or so. Actually, I should draw it as a rectangle right here. So I'd say my downside from 20 cents to 18 cents is 10%, right? My upside from 20 to 25 cents is 25%. So 25 versus 10, that's 2.5 reward to risk ratio. I'm okay with that. I really like the fact that we're above that resistance level. Now it could turn out to be a false signal, or basically a false breakout, essentially. And I'm okay with that. You know, I have my downside set, but I have a pretty decent upside. So I think this is a really good trade setup. So I'm going to go ahead and place a trade, go to the trade area, and find crypto on Binance. Well, maybe I can't. All right, well, crypto.com is not traded on Binance. I guess they're competitors. By the way, I can find that out really quickly if I add another criteria, and you may do that as well if you're limited to certain exchanges, and to say, okay, the exchange is Binance. Yep, now I'm down to 4. All right, well, if you trade on other exchanges that have crypto.com, you could do that. Let's see if we find another trade that's interesting. Loopring. Oh, Loopring, we actually just analyzed, right? We said 60 cents is a strong resistance area. What about PIVX? PIVX, boom. this name has been going more or less sideways for a long time. Okay, we just had a buy signal right here, and looks like there's a resistance level at 80 cents. And you can see how much action happened around the 80 cents area. It's acted as a support level here during August, September. Then it was broken, and it acted as a resistance level ever since really end of September. You know, it's funny. I mean, certain levels, again, switch from support to resistance back to support. And those, switches, as we call it, polarity, just reinforces that as being a very psychologically important, critical area that the market has to break through. And right now, we're still below that with a 77 cents, just below that 80 cents resistance level. Again, not comfortable for me to say that it will actually break out. I mean, I would probably come back to it tomorrow and see if it's broken above that. But for now, it just seems like it's one of those false signals, and it could very well get rejected at 80 cents again. So no go here, and that pretty much wraps it up. And Monero, it's not quite an uptrend on the long-term basis, but let's see what's happening here. It's also had a lot of sideways action. Recent buy signal received basically yesterday. And let's see, where is my support and resistance level here? Well, clearly 320 is one resistance area. We've seen a lot of rejection of price advances in the past, recent past. Another support area is 240, I'd say. The one below that would be here, capturing some of these lows here. That would be all the way down to maybe 180 or so. So we're kind of at 267. We're close to that support area, and a little ways from the resistance area. The resistance area is probably, I mean, the 320 or 300. That would make sense. That's a round number. So we have, well, we have potential sort of 20% upside. It's hard to say. It's hard to. This one is tricky. I'd probably get involved, but the other thing that may keep me from getting involved is, if I recall correctly, this is one of those that's not in an uptrend on the long-term basis, on the down, and the short term is neutral. Okay, the trend is kind of mixed. So unfortunately today, I will not do a trade. If I had access to another exchange, which I do, but not on this account, I would probably go ahead and move forward with the crypto.com trade that I mentioned earlier. Now, a couple other things I wanted to review quickly is the past trades. As you recall, we would like to sort of assess what happened to our past trades. And so we've done 3 trades so far. We can go ahead and look at our portfolio. One of them we already talked about, which was CeeLo. We're out of that, right? Right now, our balance is basically 0. But that was the MACD bullish signal crossover and an uptrend, basically today's lesson. But we did that trade in the first lesson, and that worked out well with a 30% gain. The second trade didn't work out that well. That was Litecoin. And the reason we got involved, and let's go to alerts actually. So a couple of days ago, I got an alert that the Litecoin price has dipped under exponential moving average 50. And that was my sell signal. The reason we got involved, that was a moving average crossover strategy from a couple of days ago in lesson 2, I believe. And let's go ahead and look at the trades on chart as well as as well as add the EMA 26, I believe. Yep. So recall that our signal to get involved was the EMA 26 crossing above the EMA 50. That's one of the strategies we covered early on. The crossover happened here. So that the price at the time was around 180, 170, 180. Now, unfortunately, when I did that scan, several days have passed, and because I was impatient and I was kind of forcing to do a trade to demonstrate the strategy, my entry was poor. I thought that having passed the $200 level, which was a resistance level, would have continued being a signal of a sort of a resistance breakout. But the point being is that if I had really been patient and looked for situations with recent crossovers, as opposed to getting involved a bit too late, I probably would have avoided this losing trade. So I got involved here. As you can see, we bought 5 units of Litecoin at around 200 or 199. And then the price proceeded to decline and dip and dipped. One of the exit rules for this strategy is that either price dips under the EMA 50 or the EMA 12 crosses below EMA 50. And the first exit signal, and I received an alert for it, happened a couple of days ago. And so I exited the trade here with a small loss with about 6% downside. That's okay. We're gonna have losses. But the lesson learned here is more importantly, the lesson learned here is that one needs to be selective, be patient, and catch those signals as early as possible, which with our platform you can do now. And also to set your alerts for when you need to get out. And then the third trade we had done, which was the last lesson, lesson 3, which was based on the pullback in an uptrend, was New Cipher, if I correctly pronounce it. All right, let's look at that one. And that trade, let's open up a new tab here. That trade is still on. I haven't closed it yet. New Cipher right here. Although I'm losing some money, it still hasn't given me the signal to get out. And so let's look at the big picture here, right? So what we thought is that the price is in an uptrend. It had clearly a major couple of days here. It shot up based on some fundamental news, and then it began to retreat. And so when we look at closely here, the thought process then was, hey, we're getting close to $1, which was in our mind a support area. It was a prior resistance area. So when I zoom out again, you'll see that previously that was an all-time high all the way back in February. That was an all-time high area, and then it kind of drifted down from there on. And that typically all-time high, once surpassed, it was a resistance, but once surpassed becomes a support. And so our hypothesis or assumption is that the dollar area is a support level, and as the price approached that here, pulling back from in an uptrend, you can see that the declines were getting smaller and smaller, and also that the volume was also declining, indicating that the selling pressure is diminishing as well. And so that was a positive sign to us that the $1 support area will hold. Now we're below that at 93 cents, but that's still within that zone. Again, the support zone and resistance zones are that zones, not exactly an exact number. And here, my assumption is that when it gets to 80 cents, then the trade is invalidated and I will close it with a loss. But for now, I still see this as within the support zone, which I think could still work out as a trade that will bounce back to that potentially $1.50 or $2 price target area. Now notice that I have a sell MACD signal here, but I'm going to disregard it right now because this is not a trade that I put on based on the MACD signal. Let's not mix those signal or strategies up. This is a strategy where I focused on, is it in an uptrend? Is there a pullback? Is there a support area where I think it will bounce back from? And that's what I based the trading, sort of the entry. And therefore, during the exit, I'm not going to now use different set of indicators. I'm going to use the same indicators and see if my assumptions were wrong or if something's changed with those assumptions. Okay, so that's also important because once you start mixing signals from different strategies, you're going to get lost. Stick to those rules for each strategy and don't get affected by the noise. All right, guys, well, that really wraps it up. I hope you learned some really powerful indicator or tools and strategy, which I think this momentum in an uptrend is one of them, especially MACD. This is one of the best momentum and trend indicators that everyone uses, and you should too. Again, it's important to understand the context of how to use it, mind the resistance, make sure you're trading with the trend, right? Make sure you also trim your positions as you approach the next resistance level. And I think that this strategy can be a profitable strategy for you. I look forward to our lesson next week, lesson 5. We'll also dig deeper into how to use the relative strength index, or RSI, with some oversold and overbought opportunities. Good luck, everyone. Good luck trading. We'll talk to you next week.